Welcome to gold analysis for June 6th to June 11th. It is the second week of June, post NFP. NFP came out weak for the US dollar, right? And we saw gold inflate around $40 that day after we created a higher low. And several past three webinars, we discussed that this move was just a liquidity move to take out all these buying that has been going on past couple of weeks in order to grab the order flow needed and grab the demand needed to keep pushing gold up to its next logical higher time frame level, right? So I have removed all the levels and we'll start off with a monthly time frame. But I want to just talk about first, excuse me, that just because we retrace from here, 16 to the peak, we retrace 600 pips, that does not mean we are in a bearish market, right? And how do we know that? It's because we're still actively respecting bullish market structure, right? As you can see from here, we're actively reacting to bullish market structure, right? Creating these higher lows. We got our first tap of the trend line, okay? Got our second tap here. This is like the same time when price was consolidating, right? It was accumulating. It was accumulated, right? Tapped the trend line and a key level. And then once it broke out of here, we created a new high, right? So over here, another higher low. And then now we pushed up from 1810 all the way till 1916. So that's 1,060 pip move, right? So it made sense to retrace to around 50% of it, right? This is 1,100 pips. So this is a little more than 50%, but we also got another tap of that trend line. So this is showing us that yes, we are in an active bullish trend, right? And we are maintaining higher lows and we are creating active bullish structure. So a lot of people were thinking that the trend has changed, right? No, for something like that to happen, you would need, let's say, this area to break, a price to break that area, then you needed to break through here and get some sort of confirmation of that broken trend line, right? And then you can cancel. But that's what you would need for a confirmation, right? This is just showing us that yes, we are respecting bullish market structure very nicely, right? So we can see came down, reacted right near it, stayed above here and pushed up. So we can draw the levels, but what I want to talk about is the next logical higher time frame area, or I'm going to remove this for now. If we're looking at monthly, we talked about how monthly close above these monthly candle bodies, right? So I consider that a break of that area, right? The close above there. And we know start of the month, the monthly candle or any candle in general creates a wick in the opposite direction for liquidity before going in its intended direction, such as the beginning of June, we saw price push down before now it's looking like it's going to push up. So the next logical price area that we're going to go to is these areas right here. This is the next logical weekly and monthly level and daily level. And as you can see, I'm just going to move this for now. This is the next higher time frame zone that we have, supply level, right? So this move down wasn't anything concerning of trend change, right? Because it's not at a logical level. The next logical level is here. So why would institutions try to push price down from here and change trend without driving it up to a better area for themselves? Right? So when this happened, we knew that this rejection is similar to this. We saw one push down and then price pushed up, right? Broke here and then continued up. So same thing here, price created a higher low, broke here, and then as soon as it broke above here, we're gonna likely continue up to this area, right? And similar thing to over here, we got a reaction from here, price came down to 1850s and then pushed all the way up to 1950s, right? Similar to what happened, reacted to 1916 area, came down 1856. And then now, once we break above this high, we can continue up further all the way up to 1950 weekly, monthly demand, supply. I'm just gonna make this. Right, so let's go ahead and start drawing the levels. And you know what? We can just go and we're just gonna draw all of them because we know where all of them are, or we'll draw a majority of them. I'll send the other chart after that has all the levels on it. But I'm just gonna draw these major ones, candle bodies right here. So we'll draw those right here, candle bodies, perfect retest. Over here as well, lined up perfectly here. Candle body, price action here, candle body, price action here. Oops, I'm gonna readjust this, okay? Because a lot of these levels, they do get readjusted. And we're gonna have one right here on these candle bodies. So let's drop down to 4 hour. Okay, so this, where is it? This one? This one is actually down here because it was matching this price action. This is where I entered. I still have my position here. Okay, so these are our key levels now. 1900. Oh, sorry, 1890, right? And then 1910. 1910. This was supposed to be, I had 73.5. Right, because I also caught buys from here, held that runner, but that runner just got stopped out like 2 weeks after. So I still have this runner going. And then we have 1850, 53.5, 1843.5, right? And then these ones here, we also had 1826 is, I just have all these levels memorized because I've taken buys on a lot of these levels. And yo, honestly, if you don't have the levels for the pair you're trading memorized and you can't recall the past couple months of price action, you have not back tested your pair enough. So if you cannot name all these levels from 1668, like there's levels here, there's 1700, there's 1710.5, then 1720, 22.5, 45, right? So if you can't name those, like you have not back tested your pair enough, and you should get fucking on that. So besides that point, over here, May 19th, I've discussed this previous 3 webinars too. Price push down. We saw this push down from here, stopped out all the retail buying that was going on here, and then price pushed down, created a higher low. So this is an institutionally powered move to bring price down so they can enter their buy positions here. Okay. So one thing I want you to keep in mind is the fact that when this was going down, I said in the webinar that we're most likely gonna not come to this area, because if a large institution or a group of institutions have taken positions here on May 19, if they've taken positions here on May 19, they are going to do whatever they can to protect market from coming to that price point, because if it comes to that price point, they're now at a risk of drawdown, or they're going to get stopped out at break even, right? So they're going to inflate price right before that price point. Why? Because they're going to stop out every retail trader that has been buying since May 19 above this price point. And when that happens, there's going to be very little retail traders left in the market. Now institutions can grab price right near where they entered previously. And now we have that liquidity and order flow required in the market to drive price further up into mid 1900s, right? And this is our first sign, was the quick rejection from here. You can watch any of the past 2 webinars. I discussed this too, so I'm not going to go over that much. This was accumulation happening. And then we talked about it also, that break of accumulation, we're going to go straight to 1890. So now what this shows us is we have created a higher low, right? This is our higher low, also aligns with the trend line, right? Perfect. So now we're above this key level, right? We're above this key level. First of all, we're going to fill this range. This is our initial buy range, right? Till 1910. That is already 200 pips. Also, I forgot there's a level at 1900. There's a level at 1900. So what we can start seeing is that we're going to need some sort of either we're going to come to a level, reject it, and then we're going to take buys off that level. So let's just discuss what we're going to do first. So initially, what we're going to look for is buys. I also want to highlight this minor structure here because it's like 1 hour. I'm going to make this a little, the fuck's is so thick. Oh, maybe just, yeah. So this is just 1 hour structure, but I just want to go over some things. It's very possible that price just something like this. And if it remains above 1890, we can take buys from here. First TP 1900, second TP 1910, or you can just hold all the way till 1910 because that's also very likely that it'll just continue up because this is a buy range, right? 1910. And then once we break above 1910, then we have 1925, then 1940. I forgot to add 1940. Oops. Excuse me. So then we have 1940, right? But that would mean we would have to take out 1910 first. So either this scenario happens, okay, or we push down to 1882, right? Which is previously where price grab, market grab liquidity from, grab that liquidity, and then continue up. So you can either enter over here, or you can enter when price is above this key level, creates a range, lower time frame comes to retest it, similar to what happened here Friday for NFT where we discussed that, right? You can enter 1882, same price point as here. Even better than that, you come down to 1873.5 and we get buys from here, right? And then we can ride it up all the way till 1910 first, and then drive that up all the way till 1920. 23. Actually, I'm going to move this up a little. And then we can drive it up all the way till 1951, right? So 52. So in this case, you could enter here. You could enter here, right? You can enter here. So a lot of price points to enter here at, and then obviously you can enter once this happens. 1 second. You can enter here. Once this range has been made though, right? Once this range has been made. Another key sign would be once we take out this high at 1916, create a higher high, come down, retest this level, only take this on the retest of this, right? You need a higher time frame range. So 1, 2, 3, 4 buy opportunities on this scenario alone, right? I'm just gonna screen grab this for later. Okay. Fuck, I keep removing 19 because I'm doing Control Z. So, right. So, or this is also possible, right? Not everything is any scenario can happen, right? So in this case, you just play wherever price made. In any case, you're just going to play wherever price made a high or low, right? So in this case, you could, if you missed it, let's say price came down here, if you didn't enter at this trend line, you can enter here. If you didn't, then you can enter here. Anytime price goes above a level comes to it, it's most likely going to continue because we have a higher high to fill, right? And we just formed that higher low. So we know we're going to at least continue to 1910. And since it's a higher low, we're going to continue up. So there's that scenario. And then one of the other scenarios is the fact that, okay, maybe it will just continue up, right? Let's say it just continues up and it keeps going and it comes here. In this case, I would not try to buy. I wouldn't personally look for buys here. I rather wait for this move to happen. Market breaks that high, right? If market was to break that high, sorry, let me just remove this. Market was to break that high, then I would buy at the retest of 1910. Why I would do this is because for 2 reasons. Is when I'm buying here, okay, just reacted to this level. Oh yeah, if it rejected here lower time frame, you could buy, but also you've already almost filled this buy range, right? So you've already done this massive move. What if this happened? 1 second. you know, what if that happened? That's also possible, right? It's not saying it's not possible. But it's just better that once we clear 1910, then we know that we've broken that higher high. And now we're gonna broken the previous high over here. And then every time we break a previous high, we go and make a new high, right? Break these highs, go and make a new high, broke this high, made a new high, right? So, and then we got the higher lows here. So you can see market is still in a very active bullish trend. So now that we've taken this, once we take out these highs, first is 1925 is going to come, then 1940s, right? So just play price at these key levels, and we've just secured this higher low. So we know that, boom, bro, we're going up, and there's plenty of fucking pips to catch. Even if you don't enter until 1910, look at over here, similar to what happened. See, this is the midpoint. Think of this here. Let me go to 2 hour. I'm just going to hide. Actually, fucking not even going to hide this level. Think of this area as the midpoint, okay? And I'll show you why I'm just calling that the midpoint. This is getting annoying, so I'm just gonna make that a full one. So you see how we got active price action over here, right? Here, 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 here. And price is above that. We've made that higher low, confirm, right? We made this higher low. Now pay attention to what happened here. Same thing here, similar sort of price action here, but on 1 hour, right? Price actively here came down, create a high low. Once it broke above here, it continues straight to the previous high, right? Which in this case was 200 pips as well. Continues to the previous high. Once it broke that previous high, it retested, like we're saying, in this case, it would be a retest of 1910, right? Retested it, and then it continued straight up from 1843 to 1890, 450 pips. So that's what I mean. Even if you were to miss, even if you were to miss a move from, let's say, here to 1900, if you were to miss that, you can still, there's still plenty of room for upside once we take out these highs. Once this high is taken out, we got plenty of room. We got like, remember how this pushed up 450 pips after breaking that high, after breaking this high right here? Our next target is 400 pips. 1950, it's going to come in no time, and it's going to push deep in the zone, right? It's going to push deep up into here, probably at 50, 56, 57. But anyways, from that general area. But that's it for the gold analysis. We are expecting gold to go all the way back up here once we clear this high. This is that higher low, right? All discussed in the previous 3 webinars we've done this week, right? So much shit going on. Y'all just need to pay attention, man. Just like, look, we're above this level, right? It's the same level we're at right now, 1890. Continue, boom, couple days, 1950. Same shit about to happen, guys. Just pay fucking attention. Send charts. Like, some of y'all be really slacking, right? And it's like, you just need to prepare, and then execute. When you have everything, every scenario planned out, and you're prepared for whatever happens in the market, all you're doing is react and is executing based on what scenario is playing out, right? And it's always at one of these key levels. Like we talked about, we missed these buys, you can get the buys in above 73, and they lined up perfectly. So that's it. These are the key levels for gold. But yeah, all right, guys, take it easy. Good week.